So today, there's no one that's a direct competitor. No one is offering the breadth of financial services products on a digital mobile platform like SoFi is. A lot of people talk about it. They talk about the aspiration to get there. They've talked about it since I've got here. No one has done it. We've been the only company that has done it, whether it's a neo bank or fintech or a traditional legacy bank or payments company. A lot of talk, not a lot of substance.
Did the CEO of one of our favorite fintech companies just say he thinks that SoFi has no direct competition? Did Anthony Noto just say that despite being in the Dodge dealership, he sees no challengers? The only thing that could make having no competition better is also having a $1 trillion opportunity up for grabs. And guess what? SoFi has both.
Everyone on the roster, I just want to say from the bottom of my heart, I'd like to take this chance to apologize to absolutely nobody. The double champ does what the he wants. Let me raise this. This is what I want to do. This is what I dreamed into reality. Oh, that looks good.
As an investor, you love to hear it, but is it true? Well, if we're talking one-stop shops, then yes. Although there are a lot of other fintech companies out there, no one, besides SoFi, is trying to do the one-stop shop approach. Well, technically, Elon Musk tried to do it back in the day, but he got kicked out of PayPal before he was able to do it. Although many different fintechs offer some of the products/services that SoFi offers, no one offers all of the products and services that SoFi offers. Could you imagine if you went to the doctors because you were sick and they said, "Sorry, we don't offer treatment for that type of sickness"? The same goes for financial institutions. But is offering all products and services under one app a competitive advantage or disadvantage? Warren Buffett, aka one of the greatest investors of all time, is well known for talking about the economics of a business. In fact, he has a quote that goes, "When a manager with a reputation for brilliance tackles a business with a reputation for bad economics, the reputation of the business remains intact." SoFi has a $1 trillion market up for grabs, but how are the economics of the business itself? Let's take a look at the one-stop shop approach and see how this affects the long-term economics of the business.
We're seeing tremendous cross-buying. Our top of the funnel, which we defined as low customer acquisition cost, high frequency, high engagement products like SoFi Money and SoFi Invest and SoFi Relay and Credit Card. At the top of our funnel is now 4 times bigger than the bottom of our funnel. When people cross-buy into loans, there's a huge economic savings. Our lifetime value doubles from, call it $800 to $1,000 on a student loan to $1,600. And we see similar benefits in our other loan products.
Wow, very rarely can one thing positively affect the economics of all aspects of a business, but being a one-stop shop seems to be really doing the trick. Lower cost of acquisition with higher lifetime value, count me in. Mr. Krabs spent all of his time with the Krusty Krab when maybe he should have tried becoming a one-stop shop fintech company instead.
What inspired you to build a second Krusty Krab right next door to the original?
Comment Krusty Krab down below if you think SoFi is going to make you a lot of money. So the Krusty Krab competed against the Chum Bucket, and Anthony Noto just said that SoFi has no direct competition. But even so, who is SoFi's indirect competition?
I believe we compete today primarily with legacy FDIC banks. There's 500 million accounts in our country that are still tied to legacy FDIC banks. And our goal is to acquire every one of them.
This is truly the tale of David versus Goliath. On one hand, we have the much younger yet more agile SoFi, and on the other hand, we have the much larger, slower legacy banks. Or is this horses versus automobiles? All in all, SoFi is in a really great spot. According to Anthony Noto, no direct competition, yet such a large market is up for grabs. We'll end this video off with Anthony Noto talking about the opportunity that SoFi is going after.
Yeah, I think the biggest thing that I would like to communicate is we've seen the commercialization of the direct-to-consumer technology industry unfold in e-commerce. We've seen it unfold in online travel. We've seen it unfold in media and in video. And it really, truly hasn't happened in consumer financial services. Yes, there are very big payment companies. And yes, there are very big, what I'd call small, medium merchant companies. But there isn't a big $100 billion, $200 billion, $1 trillion direct-to-consumer technology financial services company. And when I came to SoFi, I absolutely saw an opportunity to improve the value proposition in financial services for a specific cohort of members. And we're going to nail it with that target and those members. And then over time, we'll build out the concentric circles of everyone from there. But we're focused on that $1 trillion opportunity because there will be a $1 trillion direct-to-consumer financial company or legacy financial company if they figure it out. We want that to be SoFi.